Hi everybody, it's Chris here from the Trading Mentors. Hope you're well this morning. It is 9:10 on the 31st of May here in the UK. Anyway, wherever you are in the world, you are more than welcome. Now what we're seeing at the moment, of course, is ultra low volumes. We've got a funny week this week coming up. We have non-farm payroll on Friday at 1:30. We have the Queen's Jubilee celebration, so Thursday and Friday's bank holiday. So I think we're not going to see much going on. But what is very useful is we can actually do the analysis in the meantime. And these videos are really part of the training course. I'm not going to go over the details of what the settings are because that is for members only. But for members who are watching the video, this is particularly useful in your training. As you know, I've written several books and they're on the web members area in the website. But what's happened in the last few years, the video analysis and the video updates are vital in your knowledge, and you get to learn much quicker than reading books all the time. So we're into gold here on the 1 hour chart using what I call the Advanced Pro charts, and this gives us an insight into what's happening in the background. No one else will have this. No one else will know what's going on. Well, certainly 99% of people in the world won't know this. So what this does, they'll have a combination of things like maybe the order blocks and so on, but they won't have this combination, which works really well. It tells you when the buyers are coming in. It tells you when the sellers are coming in. It tells you when it's overbought. It tells you when it's oversold, and so on. And so it tells you about divergence as well, but not as clear. So what I'm going to do is I'm going to go over gold in a little bit more detail because we've got time. There's not much going on. I'm going to go over the pound USD, which is very interesting technically for you guys trading intraday and carry trades, and the US yen, which has proved interesting in the last few days from our weekly analysis, where we saw some support. The price has gone up by about 100 pips, and you could have had that and show you exactly what you're looking for, how you're looking for it, and how you can profit. So live at the moment, gold 1855, moving up into the sell zone. So what does this actually tell us? It tells us that the buyers are in. It tells us that it's not overbought on the hourly anyway. And we've got the buy arrow here as well. So in terms of direction, the buyers are in. Now, in order for this to continue upwards, it needs to break 1856, which is the previous support line which we've calculated. So this is an order block here. If it breaks above here, this is going to open up 1859 and then way up to 1863 and so on. So again, we're seeing low volumes. We're not going to see any of the buyers coming in big time, I don't suspect, because of bank holidays and so on. But nonetheless, it's always useful to know what's going on in the background, because no one else will know this, and you'll have the heads up to see what's going on and where you can benefit. Now, if the price doesn't hold and go above 1856, then guess what? The sellers may come in at some stage. We will know this from this chart. The red dots will appear, and these are institutions getting ready to sell off. So there's a good example. Yesterday, as the price came down, we had the sellers coming in the sell zone, fell back down to the buy zone. So there was an opportunity to a sell and a buy if you're working at 3 o'clock in the morning. So I've jumped into my trend with divergence, I call this one. You'll have these settings, and if you're on the 3-month course, then we'll be going on to uploading and downloading the double tops and the head and shoulders and so on. But here we can see gold 1855 doing nothing. This is the analysis that I'm looking for in a little bit more detail so that we can actually make decisions. So here's a decision. So we have a double bottom in the last few days. We have a neckline at 1856. So above this area is likely to see a breakout. So the breakout is 1856.60. Just above this neckline, above the central pivot as well. And we have a 2-to-1 risk to reward target of target 1865. It might not reach that far, but that's the target that we've given. So this is breaking down and getting closer, getting more detail in terms of action, in terms of making a decision. Because it's equally important to know when not to trade to keep your money in your account, so that you're ready for the next setup. Now, the fact that we're seeing low volumes and so on doesn't affect the technical analysis. It just affects the fact that we're probably not going to trade. That's the difference. And do we want to hold positions over through a non-time payroll? I don't think so. However, have a look at this chart. We're going to be moving on to the US yen, which is very interesting, and then the Canadian Swiss, where we've got a long position on through divergence, which is the only way I trade. As you know, divergence is ultra powerful and supersedes anything that you could ever see. However, there are always opportunities within the markets for you to trade, and the idea is that if you're doing the course, that eventually you'll be an independent professional trader making your own decisions, not just relying on me. And usually what happens is most people stick around for about 6 months and then they're on the way. I had one chap who came to see me last year, spent £5,000 at my house. He was a plumber, and I thought, okay, let's see how we get on here. I didn't really have much idea of what his experience was, but he was willing to invest the time and the money in learning how to trade. And within 6 months from being a plumber, he'd actually became a full-time trader. So by having that investment and that dedication, I guess, is what you need, you can become successful. But it's never easy. Of course, there's the skeptics out there, and you can never give up and always believe in what you're doing. Now, here's the pound USD. Now, this is, I posted this on the weekly analysis, but it gives you an idea of what we're looking for. These areas are really important areas of resistance in this case. So this downward trend, this channel, the price of pound USD is reaching the top of this. So this could be a good position trade in the next week or so, moving down. So what is the decision, and how do you analyze it, and where do you enter, for instance? So here's the 4-hour chart, and for me, I have divergence. So this is red hot for me. But before I go into this trade, this is a 4-hour chart, so this is very slow. I want to see the breakdown first. I don't want to be in this now because it hasn't broken down yet. And what I mean by that, I need to see that divergence. I need to see the price break this ribbon clearly. I need to see all the reds appear. So let me show you what that looks like in terms of a downtrend, just so you can see what I'm looking for before I trade it. So in this case here, what's happened here, the pound USD has reached the top of this range here, gone into a sell zone, and then it's broken the ribbon. And guess what? You have red, 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 red. That's the perfect scenario. So this is a continuation of a trend. So here on the 4-hour on your right, you can see here, if I line this up, red, 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 red. The dashboard is saying sell, 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 sell. So that's the perfect scenario for a carry trade. And that's what you are looking for in terms of a trend. Now, in terms of divergence, you don't need to see all that happening. With divergence, negative in this instance, what you need to see is a breakdown of price. And your target's going to be, for instance, S3 122, 123. So you can expect maybe 200 or 300 pips out of this on a 4-hour chart. With a 1-day chart, you can expect maybe gosh, 500 pips. If you're counting pips, by the way, most people, most amateurs do. I count profits, which are far more important because I'm a gold scalper. The number of pips I get, I don't even know, don't even care, to be honest. So anyway, so what we do when we have divergence, that's the vital bit. What's also the vital bit is when the price breaks down, which will probably be after the non-farm payroll figures on Friday. Let's go to the US yen as another very good example. So this is the US yen, 127.70 currently, sideways of course, but nonetheless, as I posted on the weekly analysis and yesterday I think as well, we can see that the price is now hitting a support zone, which is possibly a trade and a short-term trade nonetheless, because you can see the price structure of this. But always tradable, these things. If you see it at the top, that's tradable. If you see it at the bottom, it's tradable. So these are opportunities not to be missed if you want to take those intraday trades. And I'm going to show you an intraday trade setup, which you should have if you're a member. Now, all these different kind of setups are designed for success because there is no one way of trading. Many courses sell you the books, but they don't sell you how to make money. And this is the point of this group of settings, is how to make money. Because at the end of the day, that's all we're looking to do. It's okay doing courses. You can do hundreds of courses, but how do you use it? How do you put it all together? And this is the whole point of my unique trading style. So we can see that this was bouncing off this kind of a support area. So there may be a trading opportunity. Let's have a little bit of a closer look. So here's a closer look at the US yen. So we know from the daily that it's bouncing off a support line, a trend line, which could be vital. Not in an uptrend as price structure is confirmed, but an opportunity to buy. And this is the setup on the 1 hour chart, which you may find familiar if you remember. These are the settings. So let me point out a couple of things first, which are really, really important. The first thing is here, why would you not buy here? There's several reasons for this. First of all, at this point, the price is below the central pivot. Secondly, the price is not above the 50-day moving average at early morning UK London Open. So this is not valid. When it comes to this point here, if you were to buy it at 3 o'clock in the afternoon, you would have to say that your stop is too wide to get the 2-to-1 risk to reward. Okay, so it's gone too far, so it does need to pull back. This is a far better trade. And one thing to notice also here, the price is above the 50-day moving average. The price structure has been confirmed, and the price is above the central pivot and the 50-day moving average. A great combination. Now, the important thing here is also, if you notice here, the price is achieving higher lows. So this is stacking up. And now you can achieve your 2-to-1 risk reward. Now you can, to be safe, put your stop down here below the previous low to be fair, and you still get 2-to-1 risk reward. If you put your stop too close, then you could get whipped out and lose, but then you may need to make another decision whether to get back in, and that is where this is vital. Now you must have 2-to-1 risk reward. That is vital on all your position trades, intraday trades, carry trades, because otherwise you will not make money. What this means is that all our successful trades are twice as big as our losses. So it doesn't matter how many losses you have, the wins will be double the size. So what actually happened here? And so it's bounced off the daily chart, it's continued and it's bounced off there. There is support on the daily chart. The price is above the 50-day moving average. It's above the ribbon. It's above the central pivot, and away it goes for a couple of days trading. And remember, guys, the other thing to take note of, if you have a target of 123.10, that's 128.10, move your target to 128. Round numbers are really important. So important round numbers are 128. So round numbers are 0 zeros, 80, 50, 20, and 0 0 again. So if your target is 128, 128.50 or 30, let's say, then you make it 128, as long as you've got your 2-to-1 risk reward. So hopefully that's helpful for members and people on the course. Let me know your comments. Let's go into the Canadian Swiss, where we have a trade and where things are happening. And we had a divergence trade, which I love, and where all my trades go. Canadian Swiss, which is the last video on divergence, which is an important key element of your trading strategy because it works so well. And you need to get a combination of strategies together in your training so that you know and feel confident in what you're doing. Now, I only trade divergence, as you know, because one of the key things is that divergence is very successful. The other thing is that it's highly profitable, which is great. But the other thing as well is it keeps me away from over trading. And that's really a big problem for many people. I understand that. So I've jumped onto the intraday chart now. This is the 30-minute where we use the green background and the red background. So whenever we see a green background, then that's a buy. And this is the US yen again. As you can see, we had a target 128. And this is the lower time frame. So if you're an intraday trader or a day trader, as I call it, you're going to hold a position for maybe a few hours, but close it within maybe a 24-hour period, for instance. So from the higher time frames, we would have a target of 128. So we had a nice, I don't know what it might be, a 90 pip, 80 pip profit, which is nothing to be sneezed at. So the settings on this, and the price has to agree with the hourly chart, and the daily chart, if you remember, was showing support, is that the price needs to be above the 50-day moving average. It needs to be above the central pivot. Repetition is really great, isn't it? It's a great way to learn and earn money. So once you see a green background, that's your buying opportunity. Your stop is the support area on the buy zone. And you continue that stop if you like to manage it, to move your stop up to there and then up to there. And your price would have reached the target anyway. So any questions on that, please let me know. Let's go to the divergence chart on the Canadian Swiss. If you're not trading divergence, you really should. This is like a piece of magic which tells you that the price has gone too far and it's going to reverse and it is going to make a move. Now, we're not seeing explosive moves. No, it's taking time. But nonetheless, let me explain how this works. So divergence supersedes everything else because it's so reliable. It doesn't come around very often. But I really want to go into the detail of when a trade is a trade, when it's not a trade. This is vital in your learning. And I really want to give you guys who are members and doing the course great value for money, because I just want to help you and make sure you succeed. As you know my history, I lost a lot of money in the past. I don't want you to do the same thing. So here, for instance, you can see that the histogram is achieving higher lows. Yet the price is heading south and it's going down against this trend here. And that's exactly what you want to see. And the opposite applies for a buying opportunity or a positive divergence. So where do you enter? How do you know it's safe? How do you know it's not finished? Now, at any time during this period, you don't buy it here, you don't buy it here, you don't buy it here. At any time during this period, the price could continue down. Of course it can. The price will do whatever it wants. But let me get a bit closer for you so you can get... Let me get rid of that now because we know we've got the divergence. So here's the rules. Here's no good. This is no good. We saw this on the yen, didn't we? Yes, you could get in early and say, well, Chris, you could have got in early, you could have made even more money, but the rules don't apply. They are not ready yet. The price could continue down. And in a powerful trend, it easily can continue down. What we have to wait for is several things to happen. We first of all have to see the price above the central pivot. Secondly, we have to see the price move above the 50-day moving average. This is a really strong sign that prices are making a move. I also like to see that, as you can see here, I want to see the price achieving higher lows. So this is constructing a buying scenario, if you like. And this is a number of factors that will make the trade much more successful. So let's see how we're getting on. It's heading for our target. So yeah, we can see that it's heading for target is 7.760 and we're up 55, just over 55,000 so far. I've also got an order to open on the US Swiss, but I'm probably going to close that down as we head into the end of the week and non-farm payroll. To go over this again, just to be clear, make sure you've got divergence on the 1 hour chart, on the histogram. Wait. It's an hourly chart, so it won't be quick. Once it goes above this is 6 o'clock in the evening, this particular time, so you could have got in there at 6 o'clock. If you want to trade overnight, that's fine. However, at 5 o'clock, 6 o'clock, 7 o'clock UK time, there was obviously a trading opportunity here. Now again, you need to make sure that your stop is sufficient. I've gone for 74.80. It's below the central ribbon, which is key, and it's below this support line here of 74.89 as well. So ideally, what you want to do is take it a little bit wider if you're new, but make sure you've got 2 to 1. I mean, 1.5 to 1 is okay. I like 2 to 1. So I want to give every opportunity to get a 2 to 1 risk reward. So hopefully you found this really useful. I'll combine the updates. Just because the market's dead doesn't mean we can't learn and get ready for the next few days or the next few weeks. From Chris here in Stratford-upon-Avon, a bit rainy. Wish you a great day today and have a great week. And any questions, don't forget I'm there for you. Direct message me if you've got any questions.